Morning, everyone. It's Wednesday, and you know what that means. I'm Matt Stranix, and this is 5 Minute Finance brought to you by SFS Wealth Management. Today, I have Luke Chapman here with me to discuss what has been a hot topic recently mortgage refinances.
Thanks, Matt. Yes, the coupling of high home values along with historically low interest rates has certainly been a catalyst for these conversations for refinances lately.
So, Luke, we're often getting questions about refinances when, how, why. If you don't mind, go ahead and walk me through why someone who is 7, 9, 15 years into a mortgage would want to refinance into a new mortgage and essentially reset the clock.
Yeah, resetting the clock is oftentimes maybe the initial hurdle to at least emotionally get over for a lot of folks that would potentially consider a refinance. For the main part, you would consider a refinance for really two major reasons, and that is to have a lower payment and or to have a lower amount of total interest paid. So an efficiency in interest saved or avoided, depending on how you want to look at it, and or just the affordability of the monthly payment and having some flexibility to do some other things with what was prior or in your current mortgage, all go into the mortgage payment. So the question specifically, you phrased as resetting the clock. So somebody who's maybe deeper into a 30-year mortgage, maybe they have 20, 15, or 10 years left. Well, refinances don't have to just restart at 30 years. You'll have the options of really anything you want to create. The most common two are probably 15 and 30-year amortization schedules. So with interest rates as low as they are right now, there are many people that are 20, I would say anywhere between 10 to 15 or more years into an existing 30-year mortgage that are strongly considering and in some even moving forward with refinancing now into a new 15-year mortgage. And the reason they like is twofold. They're accomplishing both the efficiency of saving interest or avoiding interest by not continuing their existing 30-year mortgage, finishing off at the same time, so kind of not necessarily having to restart the clock, as well as meeting those two other criteria and goals inside of basically the same mortgage payment from what they had been making on their original 30-year with that original higher interest rate. Beyond that, consideration of the 30-year as a refinance always is going to lead you to a much lower payment, or at least a lower payment. So provides people the opportunity, especially in today's age, to maybe use the money on a monthly basis for something else. Maybe some other expenses have arisen, and by doing the 30-year, you're locking in a fixed payment that's lower. So you'll have the freedom and flexibility. You can pay extra on that mortgage principal and pay it down faster than 30 years, but not locked into making that higher payment. So you can go back and forth as your finances allow you. And of course, one of my personal favorites is keep the monthly cash flow what it was when you were paying that original higher mortgage payment. But now the difference we save, whether it's rebuilding cash savings or ideally we're investing it and we're giving that money each month contribution to an account that's invested in and is hopefully growing, especially over a long term. And so, frankly, there's a lot of good reasons to be considered. But personally, you have to consider all of the components that goes into it for you specifically.
Is there ever a time that a refinance doesn't make sense?
Of course, you and I live in a world where we like to say, be very, very careful with always and nevers. So absolutely. Of course, there's going to be times when a refinance doesn't make sense. I think, especially in light of the extremely low interest rate environment that we've been experiencing recently, in the opposite of that, if somebody's refinancing in a higher interest rate environment than what they currently have, it should really be considered the long-term impacts of that decision. And then also, you have to consider your lending eligibility. Some things in your financial world may have changed from when you obtained your original mortgage or your current mortgage, and you just may actually not even be eligible to get the new lending rates that other people are getting, and refinance is really not even on the table for you.
Excellent. Thank you for your insights on this, Luke. That wraps up this episode of 5 Minute Finance. Remember to tune in on the first and third Wednesday of every month for a new episode. If you are enjoying the content, be sure to like, comment, and share to help spread the financial education.